Hello, and welcome to this episode of Blockchain Bylines. My name is Nicholas Carey, co-founder and vice chairman of blockchain.com. In this episode, we're continuing our exploration of AI, or artificial intelligence, this time through the lens of venture capital. We're joined by Richard Muirhead, co-founder, chairman, and managing partner of Fabric Ventures, to discuss how investors are thinking about artificial intelligence, what's driving funding decisions in the space, where the next wave of innovation might come from, and much more. So I've known Richard for well over a decade now. I consider him a friend. Thank you for joining us, Richard. So to kick things off, I think I got to ask you one question. I actually don't know this one. So you are a venture capitalist, but how did you get into crypto? And what was your sort of like falling down the rabbit hole story?
Yeah, sure. Great to be here, Nick. Thank you. And I can't believe, it's been...
I think it's been a decade.
Over a decade. Remember the original Tanglings in 2013. And I particularly remember actually the Christie's Art X blockchain event that they hosted, where you were eloquent in putting forward the case for kind of blockchain. But we'll come back to those anecdotes. So originally, so now I wouldn't count myself as a venture capitalist, and prior to that, I would not count myself quite as a proper engineer. But that's kind of was my story, in the sense that yes, I read engineering at University of Cambridge, and I spent a bunch of time on industrial placements, looking at more at the hardware end of things. So with cars. Fast cars, Lotus, McLaren, and then pipes, a little bit less glamorous. But then I kind of, was not the only one really, kind of was excited by the kind of sheer potential of the shift towards software. So it was sort of kind of tail end of the PC revolution, and just at the beginning of the internet and the web revolution. So we're talking about 03, 04, 05. And so I had gone into... I was working on the frontier over in kind of Moscow, looking at the potential for Western companies coming to the former Soviet Union. And actually this topic may come back in terms of having an appreciation of kind of that failed economic experiment after 70 years.
Yeah.
Tried to deliver something better for the individual through collective action, but arguably had its challenges. But that is obviously, that's a resonant theme when you come to thinking about what it is as one of the kind of guiding principles or tenets of the Web3 movement. And at the time when I was in Moscow, I was moonlighting with my brother to build a telecom software company, as you do, and actually partly inspired by the fact that we had some accepted infrastructure I was using to dial up, which is CompuServe AOL or something, and that was much worse than the kind of bootstraps infrastructure I was using for my startup, which I was using a kind of local, IP pop and whatever. And I just dial in and use some standard, SMTP, and off we go. And so we built this, telecom software company ultimately, which we IPO'd LSE and NASDAQ in the end, I think it was sort of stood out to some degree in the sense we did actually achieve unicorn status, a $1.4 billion market cap, at least for a few months or so. But as Paul Graham says, there's no such thing as a fair price, it's just a market price, and this was a listed price. Okay, again, many anecdotes. But also importantly, from the perspective of my journey, and answer your question, how I got into crypto, we were pretty early, I think, in using open source software in anger.
Yeah.
So in the 90s, we were still going through the shift where people was Windows NT going to win, or was Linux going to win? And so we actually used various forms of open source software, in particular an implementation of a telecom standard called Corba in our product. And at that point in time, it was not a foregone conclusion that anyone would ever use open source software in anger, but we did it at carrier grade. So anyway, that company actually is still owned by Oracle and still delivering more than $100 million in kind of revenue at the last check.
Wow.
And then, experience of the failed economic experiment of communism, experience of open source software, came out of that, and actually was fortunate enough to kind of connect with Jim Breyer at Axel Partners. He gave me the chance to be an EIR at Axel when we were kicking off.
I didn't know you know Jim. Oh yeah.
Kicking off and obviously he's storied now in terms of backing Circle amongst other projects in the space. And he hooked me up with Kevin Kamoli, and I was an entrepreneur in residence in the London office for Axel when it was just starting.
Super early for them expanding into Europe.
Yeah, 2001, and built that company and incubated sort of something from scratch, and it was really trying to apply the principles and primitives of machine learning to tackling the challenges of delivering on a kind of utility computing infrastructure, which of course now we would call kind of cloud. And we were actually starting typically within enterprises, but some service providers to do that. And we actually sort of had our own kind of in-memory graph-based database that we built, and we had our own language to define.
You have a nerdier tech background than I think most people know about, actually.
Those primitives of machine learning gave me an idea of like how do you gather data from a disparate set of individuals, where each data set in itself is not necessarily that remarkable, but when you weave it together, it's the whole is much greater than the sum of the parts, classically. And that in turn, so the machine learning bit is in there, but in turn it got me onto the question of incentive structures. That you've got each individual person we found in these organizations didn't want to give up their data.
Right.
Because actually they'd prefer to kind of let their little fiefdom ossify and they'd sit within it and defend their kind of their patch and their salary.
Sure.
And so you need to incentivize them. So we got to looking at forms of digital incentives in these networks to get people to do it. So anyway, an answer of a certain length, and you'll cut me off, I'm sure.
I can see where it's coming.
is when I then sort of was aware of Bitcoin between 2009 and 2013, and then stumbled into actually reading one of Vitalik's early DAOs, and it was DAX originally, and then he dubbed it DAOs, I think, in 2013. Kind of just a lot of light bulbs went off for me.
Yeah. It
was kind of, wow, okay, got it. So you can just set this network off. You can define what you want in these sort of smart contracts. And, then you can feed it with data and the algorithms can decide what to do with that and be good. And you can incentivize people both to run the network and perhaps to feed the data and run, and to do other tasks using the native coins.
Yep.
As they were definitely sort of called at that time. So that was how I stumbled. And I have to thank Stephen Waterhouse, Seven as he's known these days, Dr. Waterhouse to you, sir, who was also a contemporary of mine at Cambridge. I have to thank him for prompting me to look at it in the spring of 2013 properly.
Got it.
So that's kind of, and that was when I was, defecting from being a half-good engineer to a sort of reluctant venture capitalist.
All right. I actually didn't know that story, and I'm really glad I asked it. I could see how all those themes weave together, conspired together, and sort of, tickled your interests across a variety of aspects of your early adolescence and growing up in tech. So let's talk about Fabric Ventures. Fabric Ventures is one of the prolific investors in sort of creating Web3. I think you guys have not gotten maybe the credit for even defining some of the terms that people use every day now. You've been in the trenches since the very beginning. You've made hundreds or over 100 investments. Tell us a little bit about, how you think about it, the early vintages, and talk to us about the firm structure.
Yeah, sure. So as I said, we got going more or less in 2012, 2013. And we had that, our basic initial vision actually, and we were under the brand of Firestarter at the time was, there is a gap for seed stage investment, particularly across Europe, and for folks who had, we would argue, a bit of that kind of builder DNA, had kind of been in the trenches themselves, understood what it was walk a few miles of the entrepreneurial struggle. And that becomes a trope that's sort of almost cliche these days, but it was less common back in 2009, 2013. And we worked very closely with Pantera on a couple of the deals in 2013, including Circle and Bitstamp, for example. So it's where we sort of cut our teeth. And then we
Circle just filed for their IPO today. So
there you go. That's timely. I had not caught that news.
Yeah, congratulations.
But we had a kind of role in making sure that deal happened at the time, and actually led the whole work on the kind of Bitstamp deal. And at the time, I can remember thinking about it from an investment thesis perspective. You'd ask one person, well, how do we how do we get involved in this? And it's like, well, just buy Bitcoin. Turns out, by the way, that would have been a pretty good call to just buy Bitcoin. Hindsight, of course, being a beautiful thing. But
someone had to build the things, though. I'm asked that all the time. Like, wouldn't it have just been better to do nothing? And I was like, no, because you actually needed to sacrifice all of this, treasure along the way to build interfaces, to create trust, to do much more than just sit around. And
you could exactly. I mean,
I always get a little triggered by that one.
Yeah, I can see. But we get to. But it's true. Even now, it's like if Bitcoin is having its a day in the sun, and maybe going to have an eternity in the sun. But it's not an island unto itself. It's like there's a lot of work, and even the work that's coming back now. There are various projects looking to do more comprehensive things like DeFi on Bitcoin and alternative ways to making the original vision of payments on Bitcoin really scale, and that's all standing on the shoulders of many bits, applications and infrastructure that
100%.
indeed people have built. But at the time, people go, my goodness, how do I build an investment thesis around that space? Are there enough companies? And of course, you definitely get that from any potential investors. They'll be like, "What you're talking about?" Anyway, so we I can remember that being the phase initially, and so we kind of dabbled in and out of a sort of few opportunities, but we were still kind of broader than just within quote unquote whatever the space was, which soon became known as Web3.
Right. I don't think that term had been created yet. It was like digital assets or
it was
fintech.
Gav
we were still sort of collected in that.
Yeah, Gav Wood sometime around 2014 or something had kind of coined it. Actually, for me, I had thought of it as a shift towards the semantic web, as coined by Tim Berners-Lee originally. Sure. So that, and this is kind of, I mean, we're at risk of jumping around, but it's kind of where we're getting to now. But the semantic web being the idea that you could arbitrarily bring together different pieces of software in order to achieve some, intent or kind of, purpose. But of course, that's quite hard if one piece of software is calling another piece of software and it doesn't know what it's going to get. So you need trustlessness, kind of, so that you can have that peer-to-peer kind of collaboration. So we started sharpening our kind of thesis at that time, around about 2015. Again, I would have described our thesis at that time as sort of developer first, data rich, and decentralized. And I sometimes tack the word delicious onto that to refer to the user interface or the user experience. And so that was the thesis. And then we worked with the co-founders of MySQL for a while and actually looked at a whole series of different opportunities at that time, from Protocol Labs and BigGeneDB that became Ocean and so forth. And of course, people had been making investments in equity originally from a VC perspective, and then started shifting into kind of the kind of token phase. And of course, venture firms had a real problem with that.
Really unprepared for that.
Very unprepared for that. Arguably, many still unprepared for it. And so that's where we kind of had to kind of take the activity we were doing with our friends from MySQL, the OpenOcean co-founders, and fold that back into what we built at Firestarter to co-create the Fabric brand.
Yep.
And to have something that was purpose-built to treat actually the token element as a product, as it should be, not just as a financial instrument, and to leave the choices for to the founder as to what you were doing with that token. Like, it's like, well, do we invest in equity or tokens? Well, no, we back great founders who are building great projects. So that was kind of the story. Sort of Fabric had come about a little bit, and the firm is now headquartered in terms of its domicile within Luxembourg. We've got a kind of 15 people within the firm. We've backed about 150 different projects, 500-600 different founders. We have a rather large number of limited partners, probably heading towards 400.
Yeah.
We view that as a community as well, and it is. Some of them very strategic. We're lucky enough to count the European Investment Fund as one of our backers in our second fund, with a sizable ticket. And as we look forward, we're leaning into a kind of very global stance. We think it's a huge global opportunity. I like to tell a story of, like, someone who calls me up with a new project, and I say, kind of, where are you? And like, well, I'm in Dresden. Okay, great. So you're going to be building out of Dresden. Fine. No, well, actually, so where's your development team? Well, they were in China, but I asked them to move to Singapore, and I'm opening a branch office in, New York because, the beast that is the United States has woken up to the opportunity again.
And that's like a normal conversation these days.
And my foundation is going to be in Zoom.
Exactly.
So I think being constrained by or overly focused on Europe is a bad thing. We can come back to it. Am I long Europe? I 100% am.
Sure.
In fact, I'm being very committed to help build great projects from Europe since the early 90s. And I think there's great opportunity.
You have gotten a lot of looks at early stage crypto companies and watched them bring things to market. We're entering this new era of prolific investment in artificial intelligence. And if crypto was sort of like the financial infrastructure and the property rights system for the internet, it sort of feels like that infrastructure was needed before you could really facilitate perhaps this like semantic web experience, this ownership over data, entirely new asset classes and more. Talk to us a little bit about what early stage AI investing is like these days. I mean, there's some huge tickets out there today. There's a couple big industry leaders, but I don't think that means anything really. And to me, it's like those almost look like the big banks in 2008. And all of the AI crypto projects look like Bitcoin, in 2013, like the next thing that's going to take these lessons to decentralize and then build more open access to systems to make them more resilient, make them more censorship resistant and more. So talk to us a little bit about the dynamics, because it does feel like there's a few really big players, obviously OpenAI and a couple others. And then there's tons of like smaller projects that are sort of all nibbling away at it. So how do you think about the landscape?
Yeah, so I guess we started in the phase prior to the giants taking off there, looking 2015, 16, 17 at the opportunity, for example, notably Ocean, who were looking to build ultimately became known as Ocean, looking to build a marketplace for data to support getting the right data to the right algorithms at the right time and to preserve privacy, but also to put the right price on that data. Now, okay, it turns out actually creating marketplaces for data is quite hard. And maybe that's not because the liquidity and the kind of the fungibility is often zero, and so therefore it's quite hard to create marketplaces. Along the way, hats off to Trent and Bruce there. They went and built a lot of things from scratch that then became mainstream, from kind of automated market makers and NFT standards and all sorts of things. So we saw that phase, and I think it's inevitable that, if you look at some of the major players, obviously Meta and the Anthropic guys, OpenAI, their roots are in open source, academic research and open source software and models, and that's been true not just in generative AI now, but all the way back to kind of ImageNet and cat recognition. Just over a dozen years ago. So yeah, and so that was the pedigree, and obviously famously OpenAI has switched from being open to
private.
And I'm never one in that case, whether we're talking about OpenAI in this current age of AI, or whether you're talking about the power of the Web 2 tech titans and say personified through say Zuckerberg. I'm absolutely not one to believe that anybody is conspiring to do anything ultimately nefarious, let alone evil, with this. But there is a natural concentrating power, that's a concentrating force that takes place in these waves, where there's a resource that the more of that resource you have, the better results you're going to get. Right. Then there's a cycle that kicks in. And so you acquire more capital and you acquire more of that resource, and so that concentrates your capabilities. And so we've seen that obviously particularly around GPUs.
Yep.
To a lesser extent around data, although that's starting to kick in as people are doing contracts to buy that data and secure it. Obviously around distribution.
Yep.
I guess you could see that most notable with Grok and X. Which is kind of both the data source and distribution sort of, tied together. But those are obviously really big tickets, tens of billions, spent on those things. Like that.
Monster.
Now, we think that actually would almost want to put to one side this question of philosophy, which is, do we think that something that is going to be so fundamental to our lives, where there are very intimate services around health and finance and, how we run our lives productively and so forth, should they be owned by, an individual or a corporation?
I think that's a really good. It is a good question.
It is a super good question, but like for such a good question, in a sense, it couldn't be, unfortunately, to some degree, more irrelevant. In my view, in the sense that it's very important, but typically people don't make decisions, unfortunately, on an individual basis, on the basis of whether or not something is philosophically or ideologically the right way to go. That's certainly insufficient in of itself. Now, governments can, make those decisions, but are we going to govern our way into the right kind of architecture for AI? That seems quite hard. It's extremely fast moving, extremely complex, and you squeeze the balloon in one place and someone's going to build another architecture somewhere else.
So I have a question on that for you later, but
yeah, so that's not going to happen. Now, the second thing we'd look at is, does it, have an ability to deliver better results? And, in some simplistic form, the DeepSeek moment that the industry went through.
Can you explain that for people? Because I don't think, maybe people heard it and they go, oh, that's just like a Chinese open source thing. Why does it matter?
Yeah, so now some of the numbers may have been exaggerated, but from memory, you might, on the one hand, you got something that took 3 to 6 months just to train a single model and cost tens of billions to do so from OpenAI, and then you had something that ostensibly cost $6 million.
Yeah, done by like half a dozen
done
people.
by half a dozen people sitting somewhere in China. And by the way, these are
with
serious hedge fund
near parity outcomes, right?
With near parity outcomes, and ostensibly it was like, well, because they'd tuned some linear algebra somewhere and done a couple of other tweaks, they'd managed to deliver it. And I think on a number of levels, it was pointing out there is a democratization, or there is a great ubiquity of raw talent to do these things, to build the systems, to train the models. And I know this, I'm thinking back to a friend of mine who's running a large engineering department across Europe, like maybe a good decade ago now, and like the best ML engineers are in Shanghai.
Yeah,
so let's not,
they were saying
that's
that
not 10 years ago. Yeah. So let's not beat around the bush. So the great engineers are everywhere, in India and et cetera. And then you've got either you beg, borrow, steal, and there was some controversy whether they had kind of somehow got a hold of kind of NVIDIA chips, or you have some chips from local manufacturers, or you put them together with clever systems or whatever. And then you have different, all the existing publicly available data sources, and then more. And then you can use existing models and train upon the models, and then you can do optimization. And the point was, the question emerged, like how long and how significant an advantage would any, you can spend all this money, but how long you'll be able to hold on to it. And I think maybe to get to the punchline a little bit, we think the answer is kind of both. We think that, the potential for AI applied to so many different applications is so great and so, fundamental to society that there will be room for investing vast quantities and obviously, focusing on particular distribution, particular use cases. But also there will obviously be the entire industry will be operating on a more kind of open and less proprietary basis and using everything that's made available.
Right, and have outcomes that are not necessarily requiring billions and billions of high-tech infrastructure investment to achieve.
And we'd like to think, it'd be interesting how this exactly unfolds, that this might be, and if you go back to open source software that I toyed around with back in the 90s, and we had to take that and embed it and license it within our product, and then a lot of companies struggle to find a business model around open source software. And there was a promise that tokens native to networks who were running open source software was going to become, and we put it as going to usher in the fourth and golden age of open source software and provide a business model for these things for the developers to not just build it and maintain it, and everybody, and we think that actually these open models might well have a good chance of delivering the compute power that's necessary through the coordinating power of this tokenization, the tokenized incentives, and also the data, and then possibly superior data especially if you're thinking about the challenge of retaining privacy for not just individuals, but also for small businesses and corporations when they're thinking about, I want to be involved in an AI-driven outcome, and I want to have that happen in the background. And I think anyone who's playing around with this stuff now will get this. And I saw a great thing from the guys at 11 Labs when they used the model context protocol to connect a local model on your phone to your WhatsApp data. That's an illustration of there are limits to the data set that you will want to share with somebody else's model.
Right.
Like your WhatsApps.
Right.
Like
your medical history
and
or
your medical history.
Maybe your purchase history or whatever it is.
And bearing in mind, and I was just seeing the day two, there was some sort of day two ago, I saw some sort of day zero, bugs being found within software by AI. And so, that is an arms race of AI, fighting AI that's going to emerge. But that's also the way to think about, if you share your data, it's not like, oh, will someone be bothered to kind of look at my data? Well, no. A bunch of AI agents will look everywhere and will work out what they want to do with that. And so we have to get that approach to privacy right to get people comfortable sharing, we've both got great
your health data,
on your health data,
my VO2 max,
sleeping of it, exactly.
My sleep score
exactly.
not good.
Wow,
it looks like you need some sleep medicine, sir. Yeah, I don't know if I want that.
Yeah, exactly. It's getting worse. Just increase your insurance premiums, and there are limits to the data you want to share, and so we need to get that right. And actually, I was chatting to Saul Klein over at Local Globe about it, and I think you want to, in a sense, kind of we have protocolized trust. That's what delivers trustlessness in blockchains. And where I think we're going with some of the infrastructure, and this is the marriage between AI and the blockchain, is to protocolize privacy is one element of it. So you protocolize trust, you can just have the peer-to-peer transaction and not have to have a third party involved. You can protocolize privacy, so I put data out there and I know that's the network is going to defend it for me. And maybe one of the steps further than that is protocolizing monetization, so that I will be involved in various networks
and rewarded for,
and I will be rewarded for being a participant in that. And we were chatting briefly. I think it brings us back to what I see as an inversion of the way you should think about the applications of this next phase. So some people, Sarah at Benchmark. Sarah Tavel was talking about, it no longer being the age of there's an app for that, but rather there's an agent for that. And whilst obviously I agree with the shift towards agents and the delegation of authority to these guys, not that that is a solved problem quite yet, but I think that it's not going to be so much us choosing to find an agent in an agent store that will do something for us. It's the fact that we will, through our activities day in, day out, we create this data exhaust from which you can derive a context and a really acutely hyper level of personalization for what you not just need in that moment, but what you're about to need. And then that will be the thing that services will latch onto and will invite you to participate within the service, because I know you now need this.
Right.
Like whether it's a product or a small shift in your credit. We're big fans of Glenn Vile's radical markets. Like, there will be no such thing as public property, or private property will be constantly auctioned. And so I think it will flip that way round. And so when we get to that level of being rewarded for your participation, you will be sought out and you will have, provided that context. You're pre-agreed for the fair exchange of value to participate, and that will happen. And that takes us really to the ambient computing age. We talk a lot now internally at Fabric about a triple platform shift.
Yeah.
You've got these new AI-driven applications, AI-first applications, which will come to you sitting atop. That's one platform. Sitting atop the layer of self-sovereignty, your identity, your capital, your social capital. That's the next layer. And underneath that, you've got this new computing shift where it's truly distributed computing out to the edge and what we think of as a sort of dumb device on our glasses or our watch or whatever. but also out to the edge into embodied AI, instances of embodied AI and robots.
Yeah.
And this whole acquisition, this acqui-hire of Johnny Ive's business is all about saying, the AI shift is going to come up with this hardware platform shift as well. And the interface between us and AI,
I think it's probably one of the things I'm most excited about is like, you and I can exchange so much more information in person because you can read my emotions, you can see me, you can hear me, and I'm gesticulating and I'm conveying a lot of things. But if I have to type you a message, I go, "Where's Richard? We're running 5 minutes late. I'll see you at 2. Where are you?" It's a lot of, we're still actually quite slow in communicating with each other. And I think this next step that is clearly being telegraphed by OpenAI with this acquisition is like, there's a new interface coming. And it's going to be completely different than anything we've seen before. And I think it'll be a bigger step function than we went from the keyboard to the iPhone with a gesture-based screen, getting rid of a tactile-based keyboard. This is something, a wild leap ahead of that. And no one's quite clear exactly what that means yet, but I think it's very obvious if you're playing with these tools that they're about to leap out of keyboards and do quite a bit more for us. And you're sort of describing what that is through these like agents, which are just going to be maybe applications of our personalities, interacting with things, doing things on our behalf, helping us improve in our work, and much more. And so, paint us a bit of an optimistic perspective, maybe on. I'd say the investable opportunities. If you're a founder out there, you're a young person that's thinking about building a company. What are some things they could be thinking about where there's sort of unexplored value? Because like there's a wide universe of consciousness and ideas here, but like where's it reach like a point where someone
tacks.
Where's the brass tacks where you cut a check into something?
So. I don't say this lightly, and I'm not the only one to say it, but it's a pretty damn good time to be a founder. Yeah, and a lot of people have, and I guess by implication, a good time to be investing in great founders. And there was a lot of discussion of like, here's all the money, and the value going to go accrete to these foundational models. I think even, we see that changing, and we see that there's not just pre-training, but mid-training, and then inference stage, computer optimization, and then reinforcement learning around. So it's not going to be some static foundational model, and that's it. It's going to be a whole sort of family and of these models, and around that infrastructure that gets the data in and out of them, and the compute to support it. That's all opportunity, including out to. I like to give examples of like, a robotic insole that is, is absorbing information and giving you feedback about your
run
gait
faster.
I saw something actually on a hackathon. I can't remember which one it is. There's a lot going on at the moment. That was using AI to recognize people by their gait. It just made me think about having the insole. Like, you could just recognize.
I know that footstep.
We know that person exactly. Which in a sense is also related to the ambient computing point, is because the computers pick up like who it is and your mood from your face and like all of these things. Those are the triggers they're going to be able to pick up on to give context. So I think all of that is true. I also will go with the kind of like SaaS is dead. You've got an entirely different model of thinking. I'm avoiding the classic word, for how an architecture, for how you're building software. And no chat on these kind of topics is complete, including kind of platform shifts and Carlota Perez sort of diffusion of technology is complete without having a discussion about buggies and buggy whips and the rest of it. But with a specific analogy in mind, even if you just restrict yourself to thinking about our traditional user interface and how that currently operates. And I was hearing a discussion the other day. I won't kind of misquote them, but folks know what they're talking about. We see, say, email taken and we bolt into it, whether it's Gemini or other applications, a bit of AI to make it better. But at the moment, it's a little bit like, I've taken a horse buggy, it's still got the whips and it's still got the same size wheels, and it's got actually built like a horse buggy. It's got shape, space for the horse and everything. And then I put a kind of engine onto it,
right?
And it's kind of works, but it kind of doesn't. You actually need to change the shape and to have different brakes and seat belts and
sure.
And
it doesn't look like a buggy,
And it no longer looks like a buggy. And at the moment, we've got a buggy with a kind of bolt-on of a bit of AI. And this is, by the way, not because anyone at Google, when they're slapping on Gemini, is stupid by any stretch of the imagination. But it's hard when you're stuck in a local optimum to get out of it. And it's a classic innovator's dilemma, Clayton Christensen type thing. And so, and also probably other things, like it's literally imperatives to preserve the kind of current platform.
And the revenue.
And the revenue. But if you can totally rethink what you're doing, possibly with a piece of ambient computing device, and I do not know what is coming with Love From or IO, whatever it's now called, as part of OpenAI. But I caught a rumor that it was some device you hang around your neck or something.
Okay.
But
jewelry. I didn't see that in my future.
There you
here we go.
Possibly not. It's purely because
like some metal band across your head or something. Who knows?
But so.
Conspiracy theorists.
It's allowed to, I guess it's picking up stuff from you, other people around you, probably the person opposite. Anyway, we'll see what. I don't know if you've had PIN or I know it was human.
That did the like little badge type of compute.
Yeah, exactly. And I think there'll be fumbles before it's sort of fantastic.
Yeah.
But I think that's where we're headed, and obviously we'll end up with sort of Neuralink, I'm sure, of some description, as well. But all of that is becoming a reality, super fast.
Let's do a bit of a lightning round. We've had a far-reaching conversation. Some of these will be hard to do, but let's try. We'll keep them high and tight. So, what do you think regulators are getting right or wrong now in regards to AI?
Okay, so I mean, obviously, I'm sort of from a kind of open and fairly libertarian leaning, I would say most actions are probably wrong. I think it's really hard to keep pace with it. Maybe bar one. There's one where there is action. It's a bit of a problem. I think the UK government has been leaning towards sort of opening up intellectual property to kind of, the guys training big models.
Yeah.
I think we need to think very carefully about how to protect the interests of the creators and creative classes. And I think, that new contract around intellectual property, it's a social contract, ultimately, everything from our health data to the content around our family through to, drug discovery data, like very fundamental intellectual property. We need to think through that again. And so that's going to require legal work as well as clever work around, how do you encapsulate that probably in a tokenized way? I mean, that's actually in some senses is the nexus between AI applications
creating like
running
a public
on the
good,
Web3
but that's
network.
owned in the national interest, perhaps that could be monetized.
And in very different ways. So I think, I think it would be helpful to kind of do that in a better way, and government can have a
question. Ask for a quick answer on.
Yeah.
Okay. Confession time. What is the tool that you use most? That's an AI platform today. What are you relying on?
Oh, I mean, look. Folks are using Gemini and Anthropic and everything in the portfolio, but I must confess I'm definitely using the sort of deep research mode of ChatGPT. And actually, I would love to see it happened actually. The genealogist in our family sadly passed away just not that long ago in Australia, and so a bunch of stuff kind of got sort of swirling around on the email. And I think the combination, obviously, of family trees with DNA combined with the ability to knit together that information during deep research, produces fascinating product. I know someone who does that not just in a kind of chatbot way, but produces a living, breathing a product there. There's got to be something that's pretty interesting to people.
That's very cool. Yeah. All right. What do you think is one prediction about AI that would surprise your peers that you have? So a non-consensus view about AI.
Oh gosh. Well, I'll just say what I want to be true then, which is that I think it's only in recent months that people have started thinking there could actually be applications that would make sense. Whereas, I just think there's so many exciting things to build. Where we're just backing a kind of chief of staff for kind of mothers, dealing with their children, and I think there are many other applications. And I think it's time for us to build proper applications in the space, and that it's the antithesis of the kind of foundational models will rule the kind of roost thesis.
All right, last question. Tell us a little bit about the accelerator that you have just started with Animoca, Coinbase, and Founders Factory.
Yeah. So we we think at Fabric that we've got a kind of a bit of builder DNA at the core of what we do. That said, there was a phrase that when I was a sous chef in a burger joint, which said, "You're only as good as your last hamburger." It was up on the painted on the wall, and so therefore you can't rest on your laurels. You got to get involved in building stuff from scratch. And so we think being involved in inception or talent stage acceleration is a great way to do that. It's all under a banner of contribution we call kind of Fabric X. And then so actually the UK government was kind enough to announce at the kind of FinTech Summit that we're going to put multi-millions into, 250K checks for teams that are going to be partly in residence in a program here in the UK, as you said, in combination with Animoca, Founders Factory, and with a lot of help from Coinbase and other partners. So it's kind of a cohort of roughly 10. We intend to have bums on seats in September.
Very cool. How do people get involved in that if they want
the
to
actual
apply?
launch of the site, I mean, you can send an email to any of the kind of emails on the website or me at richard@fabric.vc. And
send them your pitch.
Send them the pitch. But there will be a launch of an actual dedicated site with the type form. Should be for London Tech Week, so 9th, 10th of June.
All right, very soon. Okay, well, I want to thank Richard for joining us today and giving us the whole overview from the early stages of your career, into discovering crypto, your background in computer science, economics, incentives, being at the very forefront of some of those early bets that I think are finally coming to a perfect vintage for you. I'm excited for that. And then, continuing your journey as an investor at this intersection between crypto and AI and the future of all things. So thank you so much. And if you enjoyed this, please leave a review. And until next time, I'm Nick Carey on behalf of the entire Blockchain.com team. Thank you for tuning in. Nice.
Thanks, Nick.
I was going to ask you about killer robots, but we didn't have time.